Okay, welcome class, and today we're going to talk about lesson 2.2, which is state income tax. So, how are state taxes used? Okay, well, one way they're used, and you are in it right now, are schools. Okay, another way they are used, well, how do you get to school? Most of us do drive. So the roads, and even if you walk, that's the sidewalks. Okay, hospitals are another example of how state taxes are used. I'm sure you can think of other things as well, but those are some of the three main items where state taxes are used. Okay, so most states require employers to withhold a certain amount of pay for income tax. In some states, the tax withheld is a % of taxable wages. Your taxable wages depend on exemptions or withholding allowances, which allow for supporting yourself, your spouse, and others in your family who are your dependents. So your taxable wages equal your annual gross pay minus your exemptions, and then your state income tax is equal to your taxable wages times the tax rate. So these two equations right here are super important. Okay, so let's look at example 1. So Tony's gross pay as a landscape designer is $44,750 a year. The state income tax rate is 3% of taxable wages. He takes an exemption for himself and one exemption for his child. How much does Tony's employer withhold yearly from his gross earnings for state income tax? Okay, so what I'm going to do is, first step is I have to figure out what are my exemptions. So let's look. He takes an exemption for himself and one for his child. So that means he is single and he has one dependent. So he gets $2,000 for being single and then $2,000 for the dependent. So that gives me $4,000 for an exemption. Okay. Step 2, so now that I find my exemptions, now I'm going to find my taxable wage. Okay, so your taxable wage, that is equal to your gross pay minus your exemption. So my gross pay is $44,750, and then I subtract what I got for my exemptions, which was $4,000. So his taxable wage is $40,750. And then that lets me be able to find step 3. Okay, so how much does Tony's employer withhold yearly for his gross earnings for state income tax? Well, if I'm looking, so now I'm going to go back. His state tax rate is 3%. So I'm going to take my taxable wage of $40,750 and I'm going to times it by 3%. So remember that is 0.03. If you forget how to go percent to decimal, just divide by 100. Okay, so then when I multiply there, I get $1,222.50. Now remember, this is how much is taken out annually or for the year. Again, if you have questions on anything I do, please message me on Schoology. Okay, so your turn. So here is where I suggest that you go ahead and try these problems by yourself. So pause the video and then come back and check. Welcome back. Okay. So again, I'm going to do these steps. So the first step is I have to find my exemptions. Okay, well, married with 3 dependents. So married is $4,000. And I have 3 dependents. So I'm going to take 3 times, so each dependent is $2,000. So 3 times $2,000. Okay, so $4,000 plus $6,000 gives me $10,000. So there are my exemptions. Okay. Step 2, I need to find my taxable wage. So my taxable wage is equal to my gross pay minus my exemptions. So I get 13,760. And then my last step is to find my state income tax. So I take my taxable wage, 13,760, and I'm going to times it by 0.04. So then when I plug that into my calculator, so 13,760 times 0.04, I get $550.40. And that's my answer. Let's go to the next one. So example 2. So again, starting the same thing. So single, one dependent. So 2,000 for single, one dependent, so it's also 2,000. Step 2, find my taxable wage. So I'm going to take my gross pay and I'm going to subtract my exemptions. So 43,300 minus 4,000. So I get 39,300. And then that third step, now I can find my state income tax. So I take my taxable wage of 39,300 and I'm timesing it by 5%, so 0.05. And I get 1965. So that's how much state income tax they would owe at the end of the year. Hopefully these went well for you. Okay, so let's look at this next one. Andrea is a dispatcher for a local trucking company. She earns $52,600 per year. She is married and pays $2,430 in state income tax per year. She claims no other dependents. What is the state income tax rate for her state? Okay, so this one's asking me something a little bit different. They're not actually asking me for her state income tax. They want to know what is the rate. So I'm going to just follow the same steps. So the first thing I'm going to do is my exemptions. Okay, well, let's look. Married and no dependents. So married for 4,000. There's no dependents, so nothing to add, so just $4,000 there. Step 2, I need to find my taxable wage. So my taxable wage is equal to her gross pay, so $52,600 minus the exemptions, which was $4,000. Okay, so I get $48,600. Okay, well now let's look at that third step. So we know our third step to find our state income tax, or SIT, is equal to our taxable wage times our tax rate. Okay, well, and the reason why I wrote this is because it's not a straightforward question. So they want to know what is our tax rate, so that we can put in X. Next thing I want to look is, do I know her state income tax? Well, it says here that she pays $2,430 in state income tax per year. So that's going to go here, $2,430 equals my taxable wage, okay, which we found in step 2, so $48,600 times my tax rate, which we don't know, so I'll put X. So to find X, I'm going to divide, so $2,430 divided by $48,600. And I get 0.05, so that tells me that her tax rate is 5%. Okay, so your turn. So these ones are going to look similar, but not quite. So these are actually, we're going to do these ones together because the X is going to change on what you're finding. So Bella is an audiologist. She is married and claims 3. The state income tax rate is 4%. If her employer withholds $3,040 for state income tax, find her annual salary. So here they're asking us for our gross pay. So again, what I'm going to do, I'm still going to go through those 3 steps. Step 1, what are her exemptions? Okay, married claims 3. So married, again, I'm looking at that chart. So married is 4,000. 3 dependents, so each dependent is 2,000. Okay, well, 4,000 plus 6,000 is 10,000. So those are my exemptions. So my exemptions are 10,000. So step 2 normally is now finding my taxable wage. So my taxable wage, remember, is your gross pay minus your exemptions. Well, I need to find her gross pay, and in order to do that, I'd have to also know her taxable wage. Well, I don't know that either, so there's nothing I can really do with step 2 right now. So I'm going to go ahead and move to step 3, and you'll see why in a second, why we still can move on. Okay, so her state income tax is 4%, and I know how much she withholds. So remember, your state income tax is equal to your taxable wage times your tax rate. Well, let's see what we know. Do we know her state income tax? Yes, it's $3,040 equals my taxable wage. Well, I don't know that, so I'm just going to put that as X times my tax rate, which is 4%, so 0.04. Okay, well, to find X, I'm going to take 3,040 and I'm going to divide it by 0.04. So that gives me 76,000. Now remember, this is not her annual salary. This is her taxable wage. So now I can actually use this to find her gross pay. So now I'm going to go back to step 2 and fill this in. So her taxable wage, we just found that. That's 76,000 equals her gross pay. Again, that's what we were trying to find. So I'm going to use Y minus her exemptions, which is 10,000. Okay, well, to solve for Y, I'm going to add 10,000. So we found her gross pay to be 86,000. So again, some of these problems aren't going to be completely straightforward. We're always going to use those 3 steps though. Okay, so let's move on to example 4. So Anton is a junior partner in an accounting firm. He is single and has an annual salary of $63,400. If the state income tax rate is 4.5% and his company withholds $2,493 annually for state income tax, how many exemptions does Anton claim? Each exemption is $2,000. Okay, so let's look. Step 1. Well, how many exemptions does he have? So I need to figure that out. So exemptions, okay, remember, let's see what we do. He is single, okay, and that's kind of all we know right now. So I'm going to leave this one blank because we actually can't find that right now. So that one's going to just be left alone. But let's go to 2. So 2 is my taxable wage equals my gross pay minus my exemptions. Okay, well, I have my gross pay, that's $63,400, but I can't get my taxable wage because I don't know my exemptions. Okay, so it's looking kind of sad, like how can I even do this problem? Well, let's go to part 3. Let's see if we can answer the third part, because sometimes we just work our way backwards. So remember, the third, your state income tax is equal to your taxable wage times your tax rate. So let's see if we know any of this. Because if not, then we can't answer it. But if we do know at least 2 of them, we can answer and work back. So his company withholds $2,493. So that's my state income tax. So $2,493 equals, well, I don't know my taxable wage, so let's just do X. And my tax rate is 4.5%, so 0.045. So I can actually find my taxable wage. So taking $2,493 divided by 0.045, this gives me $55,400. Okay, so again, that's my taxable wage. So now that I have that, I can go back to number 2. So my taxable wage was $55,400 equals my gross pay. Well, my gross pay was $63,400 minus my exemptions. We don't know those, so let's put a different variable. I'm just going to say y. So to solve for y, first thing I'm going to do is subtract. So $55,400 minus $63,400. That gives me negative 8,000 equals negative y. So to solve for y, I'm going to divide by -1. So y is equal to 8,000. Okay, so this tells me how much I had in exemptions. So I had for exemptions $8,000. So does that mean that I have 8,000 exemptions? No, that's crazy. Okay, so to figure out how many exemptions I have, I know that each exemption is 2,000. So I'm going to take 8,000 and divide it by 2,000, in which case I get 4. So we know Anton had 4 exemptions. So if I was analyzing that, I know since he's single, that's 2,000. So that would tell me that he has 3 other exemptions, which means that he has 3 dependents. Okay, so those were a little bit tricky because we had to go all the way to that third equation and work backwards. So don't be afraid to do that in some problems, is you're just going to have to try different equations until it works. Okay, so let's look at example 3. So Stephanie earns $36,000 a year. She is paid weekly. She is married, has no dependents, and claims 1 for income tax purposes. The state rate is 2% of taxable income. How much does her employer withhold annually from Stephanie's pay for both state and federal? Okay, so this is actually going to be a multi-step process, so we're just going to break it up. So let's say we want to find state first. So I'm going to find her state taxes first. Okay, so she makes $36,000 a year. She is married and has no dependents. So that's what I'm looking at for state. So my exemptions, she's married, I get $4,000, and no dependents, so plus 0. So the only exemption she has is $4,000. Now I need to find my taxable wage. So I take my gross pay, so she gets $36,000 a year minus my exemptions. So her taxable wage is $32,000. And now I can find my state income tax. So that's equal to her taxable wage times the rate. So the state rate is 2%. So I'm going to times that by 0.02. And that gives me $640. Okay, so I've answered that question. Okay, so how much does it withhold annually? So that was $640 annually is withheld from the state. Okay, so now let's go to federal. Okay, so she makes $36,000 a year and claims 1. Okay, so I'm going to have to use that chart. Well, remember, when I'm using that chart, the thing I have to use is it has to be in weekly. So I have it annually, so I need to take her gross salary and divide it by 52 so I can figure out what does she take home per week. So that's $692.31. So that is how much she takes home per week. Okay, and now I know she claims 1. So now I need to go into my chart. And again, you want to go into Schoology. Consumer Math, Unit 2, your federal income tax tables. Okay, well, this is single, so I need to go to married. So she is married, and she made $692. So $692 is here, and she claimed 1, so that would be 57. Okay. So $57 is how much she gets removed for federal income tax per week. But now remember, they want it, how much is withhold annually. So then I need to take 52 and times it by, or 57 and times it by 52, because that's how many weeks there are in a year. So that is $2,964. That's how much is withheld federally. And then the question is, well, how much is withhold altogether? So I'm going to take 640 plus 2964. And I get 3,604. Okay, so this is a really good question. It is a question that you will definitely see on your quiz. So make sure if you have questions on this that you do ask it. Okay, so last thing, which states do not have state income tax? So there are states where you don't have to pay state income tax. So that means by living there, there is actually a little bit more money in your pocket versus living in a different state. So in case you ever, that's what you would desire to live, you don't want to pay state income tax, you could live in Alaska, you could live in Florida, Nevada, you could live in South Dakota, Texas, Washington, and Wyoming. Okay. Interesting fact, Tennessee and New Hampshire fall into a great category. They tax dividend and interest income, but not earned income. If we had a little bit more time, we'd go into that a little bit more, but we really just want to focus on our state, which is North Dakota. And which leads us to this one. The state of North Dakota withholds what % for state income tax? Well, we actually don't have a flat rate, so all the examples we saw were with a flat rate. And when we do 2.3 in person, we're going to talk about a graduated state income tax, which is the state of North Dakota. So depending on what you make, you could withhold anywhere from 1.1 to 2.9%. And then what state has the highest income? Well, I'm guessing this will come as no surprise, but that is California, and they have 13.3%. Yikes, that is very high when you compare it to North Dakota. So anyway, let me know if you have questions on this, and have a great